Hey, what is going on, guys? Edward here, back with another video. And as you saw on the recent video I actually posted today, I kind of wanted to break it down a bit more, um, with more explanations, more details into this thing, because today's trade definitely, um, it was not easy, but it was also not complicated to find this type of entries. And I still see a lot of students failing in this type of thing because you don't have that level of conviction after spotting a potential setup. Okay, now let me break it down here. Let me just show you what I'm talking about. This was the actual setup that I took today. It's still open, has not closed yet. I did explain the team that it's Monday. Normally Mondays are slow, and if we don't have um, that many, if we don't have any news at all, it's going to get slower. We did have one in particular, though. That was the only one that we actually had today. We didn't have much action, but let me explain here, starting coming from the daily. Okay, so from the daily, this is how the Friday candle closed, right? So from the daily, what do we have? We see that price recently pushed. We were in this sort of consolidation right here, respecting this fair value gap on the daily, finally sweeping this low right here before actually pushing back up. So we have this impulse, right? We are in this most recent impulse. Price failing to close above, okay? However, that candle, it's kind of bullish. It's still bullish though, right? It displays above this previous high. And this candle on Friday, it should have been going up, but went down instead and swept this low, failing to displace. Now, just marking this up, I'm gonna mark it up just for the example, right? Expecting this highs to be taken and this daily lows to be respected. Okay, this is what I was expecting the day before, right? On Sunday, this was what I was expecting. Uh, when I did the analysis on Sunday. I was expecting price to actually go for this high and respect this low, kind of, right? So when we go in lower time frame, and of course, hold on, let me mark up the actual imbalance, right, that we have right here. My idea is that I wanted to see price pull back, and ideally, I would like to see price pull back before it pushes up. After this impulse, having a correction down to discount. Well, I mean, it's pretty deep right here. That would have to be a very deep pullback at this point, but I'll be more than satisfied to spot an entry just anywhere inside this PDR rate, which is the higher time frame PDR rate. Well, we know that we are in this fair value gap. When we go lower, now let's go here. Let's hide this fair value gap for a moment. I don't want to see it on lower time frame. It's kind of messing up my view. So right here, right? This is the daily low. This is the daily high. I would like to see these highs being taken, right? But what time is it? It's just 4 p.m. 16, yeah, 4 p.m. That's Asian session. That's Friday, okay? So it's closing. Now we have Sunday opening, okay? This is the set. We're in Asian session. I have to wait for New York, okay? So I have to wait for New York. This is what's happening during Asian session. Boom, we're having a break. What time was this? London session, right? Now, this is actually Monday, right? And on Monday, at 7 a.m., before New York session, we're having a sweep. Price is actually taking that daily low, okay? So that's something I did not want it to see, okay? I mean, at least before New York session. But that's telling me that we're still kind of bearish, okay, and we're still getting into the imbalance. Remember that fair value gap on the daily? We are in it. So I'm going to mark up actually that 50%. I'm going to mark up this line right here. That's the one I want to have visible right there when I go lower time frame. So just to have an idea that this is probably where price want to aim for before it pushes back up, okay? Since I don't have liquidity, remember the liquidity internally is the it's a fair value gap. And external liquidity is actually swing highs or swing lows, and internal liquidity is fair value gaps. Okay, so price normally goes for those. In this case, we went from an external high, we're going for an internal liquidity, which is fair value gaps. So now, of course, have to wait for New York. Okay, and I like to mark up midnight open. I want to see where midnight open is, just to have an idea on my bias. Right here, this was the midnight open. Right now, I know that we're in New York session now. Right, New York session opening. Midnight is, we are actually below midnight, so it means that I should be looking for buys. Okay, and that kind of makes sense, right? Because I'm in this huge fair value gap on my PD array. Now, what I want to see is some sort of buy entry model, right? I want to see some sell side liquidity being taken, displacement to the upside, and I can probably go, for those highs. So another thing I want to wait for is 8:30. 8:30, which is when most of the news comes out. Okay, I want to mark up 8:30. So 8:30, it's opening right here. Now, I would like to see some sell side liquidity being taken below 8:30, and that's telling me that I am deep into discount, right? I'm deep into discount. Every time we are below midnight and 8:30, it means we are deep into discount. It means we should be looking for buys, and vice versa. Like when we are above midnight and 8:30, that means we're deep into premium. We should be looking for sales, okay? But not just selling just because, oh my God, we're above 8:30 and midnight. No, you have to find your sell entry model. The same here. I cannot just buy just because, right? I have to wait patiently for my setup. So I'm waiting from here, waiting, seeing a little that little accumulation right there. Then all of a sudden we have this. Boom. I was on the 1 minute time frame. And this is where I took my first shot. This was very aggressive. Like I was kind of seeing this as a total soup, this accumulation, that little manipulation, and probably it was going to distribute all the way to the upside. Look at what time is it? It's 9:30. New York Stock Exchange opening, right? So I was taking my shot like right about here. I was placing my stop loss here. I would start getting higher, start getting at least these highs right here from London. That was my first position, and I can totally show you that this morning where I kind of mess it up. You see? So I was going aggressively after the sweep. I was seeing an SMT divergence between Nasdaq and S&P 500. This is what also made me feel more confident, because I was seeing SMT. When I'm seeing that SMT, I'm like, oh, okay, that is a very good thing in on my favor. And I want to take it. And I'm telling you something, guys. If I see this setup again, I will take it again. Okay, it's not like, oh no, I will not take it again. Nope. This probably was, the price was not ready to drop yet. It just needed to take more liquidity. I know, this, it's possible that market may not be ready. Plus, that was an aggressive buy. We did not have actually I did not wait for the change in the state of delivery. You know what I mean? So my entry, it's kind of very aggressive right now, very very aggressive. But this is called turtle soup, right? When trying to catch a turtle soup, you normally don't wait, or you don't look for the market structure. All you see is that sweep, and you can even enter it right here at the sweep. So it's a more aggressive entry and a very early entry. But the more aggressive and the earlier it is, the more risk, right? So price just, look at this. It just never created that change in the state of delivery. If I would have waited, right? If I would have been a bit more patient and waited for the either for the order block validation or the change in the state of delivery validation, then I would have not entered in this one. you know but it's still, if I see this position, it's going to be on me. Do I really want to take the risk, or I want to wait this time for the change of state? It's going to be on me. you know So this is why, guys, those who are interested in joining my team, I don't sell signals. I don't send signals to my team. I send them ideas. I tell them, okay, guys, I'm seeing this, this, and this. I really sometimes I try not to tell them I'm jumping into this one because I want them to analyze also their charts and to see by themselves what's happening and say, oh, you know what, Eduardo, I think you're wrong. I think price is actually going to continue crashing. You know, so I don't want you to just be taking interest just because. But that was my first loss of the day, and I'm just waiting after that loss. I'm like, okay. I'm still watching S&P 500, and I'm still seeing that we're still seeing an SMT divergence. Like S&P 500. Let me see if I can split the screen here for you. S&P 500 was still not breaking this low right there. It was still forming. Hold on. It was still forming that divergence, and that was right here at the bottom. You see, for as deep as Nasdaq went right here, very nasty, right? Stopping everyone out one more time, just making sure it's sweeping everybody out, right? Right there, that SMT divergence on you see an S&P, it was still not sweeping these lows, not sweeping. Price started pushing up. So now I'm more confident. I'm feeling even more confident on this one. And I'm like, okay, you know what? I think price is going to eventually be reversing again. And this time I want to wait for that change in the state of delivery. I had the conviction, I still had the conviction today for entering, in buys. I am below 8:30. I'm below midnight. I'm seeing a sweep. I am on higher time frame, right? Remember, I'm inside the PD array on the daily time frame. This is a huge fair value gap right now, right? Now, and I have S&T. All I have to do is just wait for the price to break this thing. So let's see what's going to happen. Did we break? We did break. One single candle was breaking and also showing us right there our market structure shift, right? Now, what happened? When I see that, I place my buy. But look at the difference right here. This this is something you have to be aware of, is that the brokers, every broker is different. And let me show you something right here. Boom, 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 boom. Okay, this one right here. I send this to the team, right? Now, pay attention to here. Now, let me show you first what happened here. I'm sorry. Let me show you here first. So let's say you place the buy limit order at that line right there. That changes state of delivery or order block. Look at what happened right here with this broker, Capital Com on Trading View. The market did not touch it, right? Now, when I go on my broker, when I show you here, I did tell my team that, guys, my broker actually did activated my entry. Look at this. This was the last move, two candles to the downside, and then pushing up. The opening price of this candle, that's where I was placing around here, my buy limit. You see that this candle, when they came, they did actually tap into my zone and push. So a very small difference on my broker and this broker from TradingView. So sadly, from here, I mean, I'm not trading from TradingView directly at the moment, just trading from my broker, but did not get activated, but it did get activated on my broker. So that's a cool thing. I mean, at least I was able to make the entry. So from there, this is what happened. So I was able to take partial profits, move my stops to break even, and this is still an open trade. I'm still holding this trade up until this moment. Of course, I'm on break even, and I will have to swing trade this thing. I don't know at this point. I'm not a fan of holding positions through the night. Not a fan, unless probably is gold. I do it most of the times actually with gold, but with indices, it's a bit more different and more complicated. I still believe we might actually be pushing up now from here, hopefully. If not, I don't care. I took my profits today, and I'm a day trader. I make money daily. So Whatever happens right here, if it comes back down, stop me. I don't care. I made my money today. So that's basically it. This entry again. What I want to show here, guys, is the level of conviction that you have to have. It's not that I enter in revenge, because this is very different from trading in revenge. Some will say, "Oh, but you lose that one, and then you were entering again on the same, almost at the same time." Yeah, well, my first entry I accepted. It was a very aggressive entry, and it was a total soup. I don't like the actual total soup type of entries from ICT because they are more aggressive, and you don't have many confirmations. Like waiting for that actual change in state of delivery it's key. Now, don't get me wrong. Not just because you have a change in state of delivery or validation of an order block, it means the price will always go your direction. You can still get stopped out easily, you know. But probabilities are higher, or they should be on your favor whenever you see this that just happened right there, you know. So very important, guys, to if you have a plan, if you know your bias, stick to it. Also have some sort of limit, okay? Because there's going to be days, and it's been days like this recently. Actually, this past couple of weeks, it's been like that. There are days where price is just gonna, like, okay, another sweep, and then probably is going to do another sweep, and then it's going to try to push up, and then it's going to do another sweep. So it's going to continue bearish, right? And I set myself from two entries a day maximum. I try my best to do two setups a day, two entries a day maximum. Okay, it's very rare when I go over that. I feel like it's way too much over trading. 3 positions, 4 positions in a day, it's just way too much. I include still myself in there. I try not to break that rule because it's very risky. I know I'm putting more money to this. So I try to trade very less. The less I can, the better. If I can trade only once a day, that's it. That's it. That's all you need. All you need is just one good setup, and bye bye. On to the next one, next day, not this day. Because if you keep looking and you're thinking, "Oh man, I just killed this trade," and then you go and you make another setup and you spot another one, probably you get the other one. And so you got two cool setups. You might say, "Oh man, I'm on fire. I'm gonna keep going and see how much I can make." And that greediness can lead you to probably eventually you will be losing everything that you did with the first two cool entries. You know what I mean? So try to control those emotions to stay on point, to stay in the game, because you want to protect your capital. You don't want to risk your capital like gambling, like going to the casino or anything like that. This is not like that. Okay, you have to be smart with this thing and protect your capital. So hope it makes sense. Again, I hope this video right here was able to educate you at least something. Just make you think about things that probably you're doing a little wrong, and focus in getting the setups right. Do not think about the money yet. Money will be coming in, believe me, but you have to focus in the strategy and the setup and the plan. All right. So that's pretty much it for today, guys. Thank you very much for watching. Give it a big thumbs up. It motivates me to keep posting video for you guys. I'll be going hard on YouTube for the next couple of weeks now, since I have actually abandoned you for a little bit. But I promise I'm going to be posting more and more content for you guys. This is going to be on fire. So anyways, I'll see you guys tomorrow. Have a good night.